Hello guys, this is Cassie. So I just want to quickly break down a trade I took on synthetic indices. So for quite some time now, I've been trying new things with the same strategy I trade, the same entry model, but this time around, I've been working on my time frame using multiple, like entering from different time frame. So this was a buy setup I took on volatility 31x. I took this trade. This trade took 1 week before it hit take profit. This trade was roughly 1:4, but it took time before it hit take profit. And I took this trade from the 8 hours time frame. I took this trade from the 8 hours time frame. This was when I took the trade. You can see it here. This was when I placed the trade, and this was when the trade hit take profit. So what was the idea behind the trade? On the 8 hours time frame, I had a lower low, a lower high, a lower low, and I had a higher high, a higher low, and a higher high here. So now price came, took away this liquidity here, and got up. But there's something I want to talk about, this idea behind this trade, because you can see that price took away this liquidity and didn't start buying immediately. Let's scale down to the 12 hours time frame. I think it was more clear on the 12 hours time. Yeah. So look at it. Look at the 12 hours time frame. Look at the liquidity here, the same entry model which I trade, which is this. I want to see this, and I want to see price take away this low. Then I want to see this. This is what I want to see. Then this as my liquidity, and that is what we have here. So this was my liquidity, but then again, price came, took it away, and kept dumping until it came here, now broke this guy, and was step buying. So but what was the idea behind this trade, or what was my bias behind this trade? Now let's scale down to the monthly time frame. Look at the monthly time frame. Let me zoom. So here, okay, here you can see a lower low, lower high, lower low. Then here you will see a lower high, lower low, lower high, lower low, higher high, higher low, and a higher high. So price is bullish. Now price came, tapped on this on this liquidity which it took away, and instead reacting, tapped on this liquidity. So when I took this trade was at around this angle. So immediately I saw that price tapped on a monthly buy liquidity. What did I do? I went down to the weekly time frame. On the weekly time frame was kind of corny. I had a lower low, lower high, and a lower low. Then I had a higher high, a higher low, and a higher high. The same thing. Price came, took away this guy here, bought up to this level, still reacting, sold down to here. Now when price sold down to here, price still reacting again from this angle, got to this zone, tapped on this fair value gap, pushed it. So it was when price pushed to this level that I had my entry here, and you can see this was when the trade hit take profit. So that was on the weekly. Now coming to the daily time frame. On the daily time frame, I had this lower low, lower high, lower low. Price broke this guy. Just one break. You understand? So I just had only one break to the upside, and when I took this trade, price was still here. So I didn't, because normally I use, or the proper stuff I use is 2 break of structure. Yes, that is 2 break of structure. But here I just used 1 break of structure because of what I was seeing on the monthly time frame. And that was how I was able to capitalize and make money from this trade. So immediately I had this one break to the upside, price what? Started retracing. I saw my entry here, took it, and boom. This trade, like I said, it took one good week for it to hit take profit. I took the trade on Sunday, and the trade hit take profit on Sunday. The next is yesterday. I took it last week Sunday. The trade hit take profit just on 3rd of May, which was on Sunday. So if you want to be seeing more videos like this, all you need to do is subscribe to our YouTube channel, Trade with Cassie. You can follow us on Instagram, Trade with Cassie. We are also on TikTok, Trade with Cassie. Thank you and God bless you.